Hi, welcome to this week edition of Stocks with Emmanuel. Today, we're looking at how to manage your trade with focus on how to protect your profits and reduce your loss. Before we start, always important that you go through the disclaimer. Okay, let's go to more exciting stuff. We're looking at 3 stocks today that performed poorly last week, with a view to illustrating how it could have protected your interests or reduced your loss. The first ticker on the screen is Advanced Micro Devices with ticker symbol AMD. This stock lost 5.58% in 5 trading days. Not so bad, but what can you see on the chart? So the first thing that you see is that if you look at where my call is, this area is the area that I always call a consolidation area. And I call that zone consolidation area or psychological zone. And we say anytime a stock price consolidates for a while, break either downwards or upwards, is likely to go higher or lower depending on how it breaks from that location. So right now, you can see the area around 178, the stock went down 70 and recover a bit. But what is interesting for me is that this area of consolidation coincides with the 50-day exponential moving average. This is a line running here. We will come back to that later. Let's move to the next. We have here very popular stocks amongst the investing community, Tesla, the EV car manufacturer. Tesla with ticker symbol TSLA lost 6% last week. Again, what can you see? A few things that jump out of this chart for me. 2 consecutive quarterly performance that they did not do well, as you can see. And we say that earnings is a good predictor of how the stock price performs in the following months. So that's something to keep note of. The next thing we see is that the price of Tesla has been more or less trading sideways. A key observation for me is that the price is below the 50-day exponential moving average. This is a blue line, as you can see in my cursor. Let's move on. We'll come back to what we can learn from this chart. The last ticker we are looking at this week is V Incorporated, with ticker symbol ABBV. Is a healthcare stock, very big company in the sector. This stock lost 6.6% last week. But again, what did you see on the chart? Very simple thing that jumped out at me is that the price went below the 50-day exponential moving average, stopping and recovering around another area of consolidation, the 167.62 area. Can you see that? It's a thing of beauty. Stocks respect this consolidation area. Do make sure to subscribe and hit that notification button so you can be updated as we give you this very important stock that can be used to make money. Okay, we don't just go through these stocks for fun. We want to learn lessons. What are the lessons we can learn from those 3 stocks? 3, very quickly. The first one is that pay attention to what the price of a stock does around the exponential moving average 50. Okay, let's see. I hypothesize that exponential moving average 50 is the dividing line between a trending stock or a stock that is going downwards. Let's see how that plays out in the 3 stocks that we look at. For AMD, the stock is just breaking downwards below that dividing line, the exponential moving average 50. For a Tesla, the stock is yet to recover above the 50-day moving average. If it's up to me, I would wait on Tesla prove itself by crossing over this dividing line. So if you're considering buying a stock or you have a stock that is doing well, pay attention to what it does around the 50-day exponential moving average. Next lesson, poor growth. I've said this over and over again that earning performance is an indicator of how a stock price should do. ABBV last earning was not so good, as you can see. And Tesla, you can see two quarters in a row didn't do well. So no surprise that the stock price is also not doing very well. The last lesson for this week is sectoral rotation. What do I mean by that? Investors do not just focus on one stock. Sometimes they rotate or they move their money to trending sector in the economy that is doing well. So pay attention to see which sector is doing well generally. To illustrate this, I look at Tesla. Tesla is in the sector that is called consumers discretionary, a sector that people buy when they have a lot of money, and when economy is going through a stress, that sector seems to suffer. And so if you go and look at the consumer discretionary sectoral ETF, they are not doing that well now. So when that happens, if your stock is beginning to go down, you need to check how is the general performance of the sector. Yeah. Those are the 3 lessons that I have for you. I hope that you will use this lesson to review and manage your portfolio or choosing what stocks to buy in the coming week. Do have a successful trading week.